The stock market is now open, and members of the Baseball Hall of Fame rang in the opening bell at the New York Stock Exchange just a short time ago.
Gene Peroni, Senior Vice President with Advisors Asset Management, joins us now from Philadelphia. Gene, looking at the latest numbers, what do you make of today's start after the turmoil we've seen unfold globally this week?
Well, the market presently is very reactive. So this morning reacted in part to the latest job numbers. But this is something that really refers to the past. The market wants to get some sense of direction about the future, and that's why it's struggling right now, why it's so reactive to China, to geopolitical events, whether Saudi Arabia and Iran or North Korea and so on. When the market is uncertain and doesn't have direction, it usually seeks the path of least resistance, which is lower. But right now we are getting a little bit of a lift here. The market's oversold. The unemployment data looked a little bit better than expected. So we are seeing some rally here, but the question is, can it be sustained near term?
Gene, with the new December jobs numbers out today, the U.S. added nearly 300,000 new jobs in December, and unemployment stayed at 5%. How does that play into what's been a little bit of a rough week in U.S. stocks?
Well, it has been. I mean, it's one of the worst weeks to start off a new year in history, I believe. So, some relief was probably to be expected, and it came in the form of this government scheduled government report. But I wouldn't put a lot of credence and gravity in the unemployment data alone. I think there are other things we have to watch very carefully. We have to watch oil. Is oil going to stabilize here? I think that is kind of a barometer of perceptions about global economic expansion. If it continues to weaken, that's going to be a concern about the economy, not just here, but globally as well. We want to watch the transport, see if they start to show leadership. The airlines, the rails, the expedited shippers, they're weak here. So that's a concern as well. And now we're coming up on the fourth quarter earnings season. We want to see especially how the consumer discretionary stocks perform vis-a-vis the expectations by Wall Street analysts.
Gene, you said this has been one of the worst weeks in history, but is this considered a financial crisis?
No, I don't think it is. Certainly, we can't compare it to 2007, 2008. And quite honestly, some of the things that the market is reacting to are not things that suddenly came about. China is not something new to the markets. It's been really in the news on and off for some years now. Certainly the geopolitical factors, terrorism, have certainly been on the table for some time. But still, the market really needs to see some direction. I think that they're looking toward Washington for some policy to kind of match up with the monetary easing that we've seen for years.
All right, Gene Peroni in Philadelphia for us. Thank you.
My pleasure. Thank you.